Bitcoin.
2021 will go down as the year that Bitcoin went mainstream. After years of mockery, it at last became a serious topic of conversation. Unsurprisingly though, the narrative is still dominated by talk of the price. After all, it really has been a roller coaster. But let's dive below the price swings and focus on the fundamentals for a moment. Because if even a fraction of what Bitcoin's staunchest proponents predict comes true, the world, not just investors, financial institutions or central banks, but the entire world could be in for a seismic change. And so this is a story about how, because of its unique features, Bitcoin is a better form of money than the alternatives we use today, and it is arguably the best form of money that has ever existed. That's a bold claim, and we'll get to why, but first we need to tackle the question: what exactly is money? At first glance, the answer might seem obvious. It's coloured pieces of paper with pictures of faces on them. More commonly today, it's numbers on a screen. These are backed by central banks, governments, and a global financial system. But throughout history, we have at various times used many different forms of money. In ancient societies, things like animal skins and salt were used as a form of currency. The natives in Micronesia used rice stones. Gold has, of course, been used as money for thousands of years. And those pieces of paper and numbers on a screen were themselves backed by gold until Nixon abandoned the gold standard in 1971.
I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold or other reserve assets.
The point is that there is nothing fixed about our monetary system. Throughout history, it has changed again and again. Sometimes because civilizations discover better monetary technologies, and at other times because it suited the agenda of those in charge. So we can say that money is a tool invented by societies repeatedly and independently of each other throughout history. The question then is, what is this tool used for? And is it possible that Bitcoin could better serve these uses? Money has three primary functions: store of value, medium of exchange, and unit of account. Store of value means that the purchasing power of each unit of currency remains steady over time in relation to the goods and services that you can use the currency to buy. If I put $1 million into a briefcase and bury it in my backyard, I am essentially bleeding value because of inflation and the never-ending money printing. Now the dollar is without a doubt a better store of value than some other fiat currencies, but over long periods of time it's still pretty terrible, and gold has traditionally fulfilled this store of value function. In times of high inflation, money has flowed into this time-tested safe haven asset. Medium of exchange means that the money is used as a go-between in the economy. Prehistoric societies used barter systems where goods were traded directly for each other. That's okay for small farming communities, but it quickly gets complicated when you scale things up. Try directly trading 100 cows from a farm in Indonesia for a house in France, and you will quickly see the limitations of life without an economic go-between. But with a medium of exchange, you are just a few steps from trading one thing into anything else. Unit of account is the money that things are priced in. Usually whatever medium of exchange is most dominant in an economy will become the primary unit of account, simply because it's the easiest thing for people to work with. So if you're buying real estate in Australia, that would be the Australian dollar, but if you're buying equities on the international market, it would probably be the US dollar. All forms of money we have used in the past and use today fit at least one of these uses. To see why Bitcoin is superior money, we need to dive deeper into what makes money good or bad at performing these uses. Good money should be scarce, portable, durable, divisible, and fungible. Gold is scarce because its supply is limited by the natural deposits in the earth, and it needs to be literally dug up from the ground to make more. The dollar is not so scarce. The dollar is portable. Cash is light and can be easily moved around, and in digital form it can be moved internationally. But that process is limited somewhat by bank and government regulations. The dollar is also highly divisible, much more so than gold, so it's easier to use dollars to make purchases both large and small than it would be to use gold. Both the dollar and gold are durable. Cash goes bad over time, but old notes can be replaced, and digital dollars don't degrade as long as the data is stored and backed up properly. Finally, the dollar is highly fungible. $1 equals $1. This can be contrasted with something like art, where each piece has a vastly different value. Because the dollar wins on portability and divisibility, it's mostly used as a medium of exchange. And because gold wins on scarcity, it's mostly used as a store of value. Bitcoin's strength is that it combines some of the best aspects of gold with some of the best aspects of the dollar, and it arguably outperforms both of these. Gold is scarce, which makes it a good store of value, but Bitcoin is more scarce than gold. If the price of gold rises, there is an incentive to mine more of it, and mining companies invest in more equipment and open new mines. The increase in supply of new gold acts as a drag on the price. Bitcoin has no such incentive. When the price rises, it becomes more profitable to mine, and so new miners join the network. But there is an ingenious mechanism called the difficulty adjustment that stops too much Bitcoin from being mined. Basically, as the computing power of the mining network increases, it becomes harder to mine. It takes more advanced hardware and more electricity, and so the cost to mine one Bitcoin increases. Less efficient miners can't make a profit and they drop off the network. This acts as an equilibrium and ensures that Bitcoin sticks to its supply schedule. Currently, that's 6.25 new coins every 10 minutes, which equals an annual inflation of 1.8%. And this halves roughly every 4 years until it reaches a hard cap of 21 million coins, after which no new coins will be created. Bitcoin is highly portable and can be sent as simply as sending an email. It takes 10 minutes for each block of transactions to be processed and confirmed on the blockchain. Now, this is often cited as a failure because it means it can only process 7 transactions per second, which just doesn't cut it for a global financial network. But what the critics don't mention is that the fiat money system is itself slow. The European SEPA network, for example, takes 1 business day for interbank transfers. Only by building networks on top of the fiat system, things like PayPal, Visa, or MasterCard, is it possible to achieve near-instant transactions. In a similar way, Bitcoin is solving this problem on the second layer and has built something called the Lightning Network, which can process transactions with near-instant confirmation and could eventually be scaled up to billions of transactions a day. Bitcoin's decentralized network, really its key innovation, also adds to its use as a medium of exchange. In the traditional financial system, centralized third parties like banks hold our funds. Whenever we want to transact with someone else, we need to go through one or several of these third parties, who will verify that the funds have left one account and reached the other. Bitcoin takes these institutions out of the equation. People can transact directly with each other, and the network verifies that the transaction is legitimate. They don't need to trust each other, they just need to trust the blockchain. That means there is no middleman, no single point of failure, and it also means that once a transaction is confirmed, the clock can't be turned back. Contrast that with the fiat system of endless paperwork to wire money, card refusals, account freezes, and chargebacks for merchants, and it's hard to argue that Bitcoin isn't a better medium of exchange. at least on a purely technical level. Sure, it's not so widely accepted as a means of payment yet, but it's still very early on its adoption curve, and use is growing exponentially. At the current growth rate, there will be 1 billion users in 2025. The only real question hanging over Bitcoin then is fungibility. Are all Bitcoins equal? On the face of it, the answer is yes. It is freely traded and the market decides the price. But the fact that the transaction history is easily traceable makes it possible for some Bitcoins to be considered tainted, if they have previously been involved in a criminal transaction, for example. This already happens today. Many exchanges block coins that have been mixed using an anonymizing service called a tumbler because of money laundering regulations. It's also only really a problem when interacting with on and off ramps between the crypto and traditional systems. In the future, when we have more and more merchants accepting Bitcoin and an increasingly circular Bitcoin economy, it's highly likely that the fungibility question is going to fade away. So we have something that is a technically better store of value than gold and a technically better medium of exchange than the dollar system. The only thing it's missing is wide adoption and recognition, right? Well, Bitcoin is undoubtedly still a very new technology. And with around 130 million users, it's roughly where the internet was in 1997. But it's growing exponentially and it's starting to get support from some very major players in traditional finance. Companies are adding it to their balance sheets, and it's even been made legal tender by El Salvador. The question all investors, large and small, will at some point need to ask themselves is, given its clear advantages, how much of the store of value use will Bitcoin capture from gold? And how much use will it gain as a medium of exchange once its price starts to stabilize? And depending on the answer they come up with, do they want to jump on the train or do they want to bet against the continued rise of Bitcoin? Thank you for watching. If you enjoyed this video, please give it a like, subscribe for similar content, and we will see you next time.